Have you ever opened your email or checked your mail and suddenly you see this form called a 1099-K and you're thinking, wait, what is this? And why does it show way more money than I actually made? Yeah, you're not alone. This is one of the most confusing and, honestly, one of the most misunderstood tax forms for business owners today. And if you don't understand how it works, you could end up overpaying taxes, or worse, raising red flags with the IRS. Hi, my name is Bobby Casey. I'm the founder of BusinessAnywhere.io. I'm an international tax lawyer, and for the past 20 plus years, I've been helping entrepreneurs all over the world structure their businesses, optimize their taxes, and stay compliant. And today, we're going to break down Form 1099-K, what it is, why you're getting it, and what you actually need to do about it. All right, so let's start with the basics. What is a 1099-K? In simple terms, it's a tax form that reports the total amount of payments you've received through third-party processors. We're talking about platforms like Stripe, PayPal, Square, even marketplaces like Amazon or Etsy. If you're accepting payments online, there's a very good chance you're going to see this form. But here's where people get confused. The number on that form is not your income. Let me say that again. It is not your income. It's your gross payment volume. And that distinction is extremely important because the 1099-K reports the total amount processed before fees, before refunds, before chargebacks, before any expenses at all. So if you look at that number and think, okay, that's what I made, you're already off track. And that's where a lot of people end up over-reporting income and paying more tax than they should. Now you might be wondering, why does the IRS even care about this? Well, over the past several years, there's been a big push for more transparency in digital payments. A lot of transactions used to fly under the radar. But now payment processors are required to report that activity. So the IRS gets a copy of your 1099-K and you get a copy. And what they're doing is matching that number against what you report on your tax return. If there's a big mismatch, that's when questions start to come up. Now, here's another important point. Just because you receive a 1099-K doesn't automatically mean all of that money is taxable. And this is where things get a little nuanced. Let's say you processed $100,000 through Stripe. That doesn't mean you made $100,000 in profit. You might have had refunds. You might have had transaction fees. You might have had cost of goods, software expenses, marketing costs. All of those things reduce your actual taxable income. But the 1099-K doesn't show any of that. It just shows the top line number. So what you need to do is reconcile that number properly. You want your reported income to align with the 1099-K, but you also want to accurately reflect your expenses. And that's where good bookkeeping becomes absolutely critical. Because if your numbers don't match or you can't explain the difference, that's when you run into problems. Now, another thing I see quite often is people getting surprised by this form. They weren't expecting it, and that usually comes down to threshold changes. In the past, you needed a relatively high volume of transactions to receive a 1099-K. But those thresholds have been changing, and more small business owners, freelancers, and digital entrepreneurs are now receiving these forms, even if they're just getting started. So if you're running any kind of online business, you should assume this is something you'll eventually deal with. Let's talk about a real-world scenario for a second. Let's say you run an online business selling digital services. Over the course of the year, you process $80,000 through PayPal, but after fees, refunds, and expenses, your actual profit is maybe $40,000. Your 1099-K is still going to show that $80,000 number. So if you don't properly account for the difference, it looks like you made twice as much as you actually did. And that's exactly where mistakes happen. Now, here's something else that's really important. Not all transactions reported on a 1099-K are even business income. Sometimes people receive personal payments, reimbursements, or transfers between accounts. In some cases, those can still show up on the form. So you need to be able to separate what's actually business income and what isn't. Because again, the IRS is looking at that total number, and it's up to you to explain it correctly. So what should you actually do when you receive a 1099-K? First, don't panic. Second, don't ignore it. What you want to do is reconcile it with your records. Look at your payment processor statements. Compare that with your bookkeeping. Identify any differences. fees, refunds, non-income transactions, and make sure everything is accounted for properly. And this is where having a clean system really makes a difference. Because if you're trying to figure all of this out at the end of the year, going back through hundreds or thousands of transactions, it becomes a mess very quickly. Whereas if you have proper bookkeeping in place throughout the year, this becomes a much simpler process. Now let me just say this. The 1099-K itself is not the problem. The problem is misunderstanding it. Because when you understand what it represents and what it doesn't, you can report your income correctly and avoid unnecessary issues. So to wrap this up, Form 1099-K reports your gross payment volume, not your profit. The IRS uses it to track payment activity, and it's your responsibility to reconcile that number with your actual income and expenses. If you do that correctly, there's no issue. But if you ignore it or misunderstand it, that's when things can go sideways. And if you need help with this, whether it's bookkeeping, tax strategy, or structuring your business in a way that keeps everything clean and compliant, that's exactly what we do. Through our Digital Nomad Kit, we help entrepreneurs set up their companies, manage compliance, handle bookkeeping, and optimize their taxes, all in one place. You can find more information in the links below. Hope that clears things up, and I'll see you in the next video.